Time now for markets, and we had a pretty strong reaction to last week's USDA June Acreage report. Some analysts are calling it shocking, confusing, and incomplete, to name a few. Iowa State University ag economist Dr. Chad Hart joined me on Tuesday, and we started our discussion by talking about the acreage report and getting his thoughts on what's next.
Well, the market reaction was, fairly negative for corn. They took us down about 20 cents right after the report was released. Soybeans gained a little bit just because when you look at what the acreage report sort of did, it put all of the prevented planting basically into the soybean market as opposed to the corn market.
So what do you think that means for corn futures moving ahead, and what do you see as the ripple effect on other parts of the market?
Well, I think here what we'll be watching for is, the other thing that USDA announced when they put out the report was that they knew they were going to have to resurvey. And so I think you're going to see, let's call it several waves of reaction to acreage as we move through this summer. They mentioned the timing here is they're going to resurvey here in July with a release of any sort of updated information by mid-August. But I think what we're going to see the market do is really start to concentrate on, while we wait for that resurvey, we're going to be watching the Risk Management Agency data, basically watching for those prevented planting acres showing up there. And I think we'll see the market react as those acres start to accumulate on the RMA ledger.
So, Chad, for everybody watching, what do you think the big takeaway from this report is that they need to know?
I think the big takeaway was prevented planting did take a chunk of acreage out here. If you look here, while corn, really didn't move, it was the soybean area dropping by roughly 5 million acres that really showed that, there was a fair chunk of acreage here that even with the delays in planting, we're not going to get planted this year. And so that acreage is going to be taken out here. We're going to see probably a little bit more taken out as we move through July and August. Then the question becomes, as we go forward here with the crop that we did get planted, can it move through, its growing process in time? I think maturity is going to be a challenge unless we have a very deep fall this coming fall.
Lots more to follow up on this, to be sure. So next up, Chad, we're into July, so lots of folks going to be on the road for vacation. Big story that we've been following on the show is Yearround E15 and the easing up on the regulations for that. So could you give us some updates on what the E15 demand has been like and the impacts that we're seeing for producers and in the market?
Well, in this case, at least as far as I can tell, looking at the data here, we are seeing a little bit of a bump from E15, but it's hard to differentiate it from just, let's call it the regular summer driving bump, where we do tend to see more ethanol churning through the system. Over the past 4 or 5 weeks, we've been watching ethanol production ramp up and stock levels drop as we basically consume more gasoline through our normal summer driving. Having E15 available year-round is going to help push that on a little bit, but it's a little bit early to tell or be able to differentiate that bump from the regular driving bump.
Okay. And looking overseas, and we've got news from the G20 Summit impacting trade negotiations with China. What can you tell us here?
With China, it's sort of the on-again, off-again of that. As long as we're talking, for the most part, the markets are taking that as positive news. But we're not as euphoric about those meetings as we have been in the past. And so, if we watch the crop markets, over the past couple of weeks, any news about China, it moved the market, but it's moving it a lot less than it did, say, 6 months ago. And I think one of the bigger things I'm going to be watching for here is not just the action with China, but the ongoing discussions, especially with Japan and the European Union, about getting some trade deals moving with those countries as well.
And finally, Chad, before we let you go, anything on your mind regarding marketing or risk management options that you'd like to share with us that you haven't mentioned?
Well, like I say, when we're looking at the markets right now, we have seen after the report sort of both markets come back a little bit, especially on the corn side. So, we had a good hedging opportunity a couple of weeks ago that sort of faded away now. So one of the things I'm looking at here is for those that have already made some sales, now may be a good time to look at those out-of-the-money call options, because those call premiums have dropped a little bit here, and that gives them a chance to gain a little upside potential, even on bushels they've already marketed this year.